Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, July the 21st. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Little economic data we got out today in the form of across the pond in Great Britain. We got retail sales came in at negative 0.9%, was expected at negative 0.4%. And the wholesale sales in Canada came in slightly better than expected at 1.8% versus the expected 0.2%. Usually don't talk a whole lot about Canada, but that one was a pretty big beat on their front. The ECB press conference is going on today, so keep that in mind. Here in the States, we had Philly Fed, which is a Philly Fed manufacturing number. It's kind of a gauge of what all the manufacturing sector is doing in Philly. And it came in at negative 0.29%, or negative 0.29, I should say. It was expected a 5.1. So that one has been really all over the place, and that's usually a pretty good gauge as to the manufacturing sector. It's usually pretty spot on, but lately, the last several months, that number has been all over the place from negative 6 something to, positive 5, 6 the next month, and then back into negative territory. So that one is a little bit discerning why that is all over the place. Anyway, we had unemployment claims also here in the United States came in better than expected at 253,000 versus 271,000. We also had existing home sales come in at 5.57 million units versus the 5.48 million units, so better than expected on that front as well. And then we had the CB leading index come in at 0.3 versus the expected 0.2. And finally, we had the natural gas storages come in at a bit of a drawdown of 34 billion cubic feet versus the expected 40 billion cubic feet, which is a big drawdown from the previous number, which came out at 64 billion cubic feet. So a lot of natural gas being used. There is a lot of natural gas being used for energy right now, so that could be in part why that big drawdown is happening. Anyway, we have, let me go back to the natural gas, because natural gas is being used for energy and things of that nature. We're seeing unseasonably warm in the Midwest, and that could be, a lot of people using a lot more electricity, and they're using natural gas a lot of times now to generate that electricity. All right. Anyway, on to the markets. As you can see here, /CL, which is crude oil, right there at the $45 a barrel mark, just slightly down on the day, about 30 some odd cents, but right at the magnet, which is where the most time and volume has been spent. So it looks like it's really getting comfortable right there. Gold pushing a little bit higher because the overall equities are slightly bearish today, but gold, as you can see, just up a little bit on the day, up about $4 for all intents and purposes, close to the highs of the day, but pushing as people are taking money out of equities and throwing it into the gold market. And bonds were down quite a bit earlier today and are pushing back higher, down 20 ticks right now. Getting a little bit of support off of the moving average right here. As you can see, the 50-day moving average came down, touched that, and that then repelled away. Onto the equities, as you can see here, actually NASDAQ /NQ up on the day. We are above this value area high, so the bulls are probably getting a little bit tired, from a chartist standpoint. And, they may blast off again, but taking a breather today for the most part. Onto the E-mini S&Ps, they are slightly in negative territory, as you can see here on the day, just by about a half a tick. or a half a point. But again, we are really extended above here, and it's starting to see the volumes come off quite a bit as we're getting into these highs, which means there's not a lot of participation up there. Could be an indication as a reversal in this trend or a bit of a pullback. As you can see here on the E-mini S&Ps, yes, it feels like an inside day for the most part. It's not really an inside day because we kind of busted out above it. But, with the market profile, that is a classic inside day where it is basically wrapped around the previous day's point of control. And that's where the most time and volume has been spent. Yeah, it blasted off there, got a little thin, not a whole lot of volume trading up there, but an inside day for the most part as everybody's kind of looking to take a breather right now and holding off. On to a couple of things that I've done. Southwest Airlines, ticker symbol LUV, came out with earnings and missed. So I didn't do this as an earnings trade. I got really busy getting ready for my webinar yesterday, and this kind of slipped by the wayside. But it's got pretty decent IV. It hasn't gotten that IV crush, and I think I'm going to be a little bit more bearish in Southwest because they're missing on those earnings. I think we could easily see the market want to come down here and test this value area low in the next several days. So I ended up implementing the put Christmas tree that I did a webinar on yesterday. We had a lot of people in on that class, and it went over really well. I think a lot of people got a lot out of that. So if you don't know much about the put Christmas tree, you can go to protraderstrategies.com, sign up for that one. It's a really good one, especially when you have these implied volatilities where they're right around 30 or something like that with these underlyings, especially with the stocks. Because usually what I talk about in all of these videos and in the webinars that I like to sell option strategies when the IV is above 50, and I like to look to buy option strategies or pay a debit for those option strategies when the IV is below 20 for the best case scenario. But what do we do when it's right between 20 and 50? Well, this Christmas tree butterfly, or it's a butterfly in the sense it's in the butterfly family, but the Christmas tree is a great strategy to implement around that, because depending on what happens, it helps us if IV goes up, and if IV goes down, it can help us also. So if the market kind of trades sideways and IV goes down, that's good for us. But if the market really falls out of bed, then that IV expansion helps us. So there's a lot of good things that can happen with this. It's one of those few strategies that can benefit from an increase in IV and a decrease in IV, depending on what the market is doing. So I decided to go into Southwest because it looks like I think that they're going to go down there and at least test that point of control. We could see the market lose a little bit more implied volatility if we see that slow trickle down there. So I decided to put this put Christmas tree on in Southwest, which is ticker symbol LUV. And I did the August. I bought the 38 puts one time and then sold 3 of the 36 puts. And then to define all of that risk, I bought 2 of the 35 puts. And it's like a butterfly in a sense, and I go into all the details in the webinar. I don't really have time to go through all of that. And I paid 35 cents for that strategy. So that one, I'm looking for, a little bit, if it trickles down to that 38 strike, I can look to make about $1.70 on that when I risk 30 cents. So that's a good risk reward, especially in something like this where right after the earnings, I could see the market want to come back down a little bit, have a bit more of a pullback, and a little bit more volatility contraction. All of that stuff would help me out in that strategy, especially if we pinned right there at that 36 strike that I'm short. I want those to decay and expire worthless and have the 38 puts gain in value for that full width of those spreads. On to some earnings trades that I've done. I was kicking myself all day yesterday or all day after the close, because I was getting ready for this webinar and doing a lot of other things, and I just time slipped by, and all of a sudden the market was closed. So I missed the opportunity to put on some of the earnings trades yesterday. So I decided to put these on early this morning so I don't forget about them. And with an inside day like we're seeing today, I don't see a whole lot of movement. I like to put these earnings trades on at the end of the day, and so I get to capture that perfect move right for the market maker move. And with CMG, I was able to go pretty far out. They have good implied volatility for this, and I'm waiting for that volatility crush, which I've just done a big course on, so you can check that out also at protraderstrategies.com. One of the most important things to understand is volatility and how it's going to affect our premium. So check that out, and it is especially important around these earnings trades. Anyway, so I went into the July that expire tomorrow, so they expire on the 22nd. The July 360 puts I sold, and then I also sold the 465 calls, and that creates a strangle. So I've got a strangle wrapped around CMG, which is Chipotle, and I collected $2.80 for that strategy. Looking for it to be able to stay basically below this point of control would be the best case scenario, and not really pop above there. You know, if they come out with better than expected earnings, it could easily go up and just settle right there and hit right there at the magnet. And then I got the 360s because that's well below this last low, and it really created a nice strong bottom there. There's a lot of support right around in there, so that seemed like the perfect place to get below that and hopefully be able to collect all my credit in a day with that volatility crush happening, and that allows it to have all that data come out of it. Now with Visa, another earnings trade that I put on, I went into the July weeklies also, or the weeklies that expire tomorrow, and sold the 75.5 puts and the 81.5 calls to create a strangle for a total of 71 cents on that one. So again, looking for it to stay below basically this resistance area. 81.5 would be right here, so that would be nice. I get that volatility contraction and the theta contraction, it probably could test my 81.5, so I thought, but at the end of the day, they're going to be relatively worthless. So I'm looking for that. And then on the 75.5s, it's well below the support area right here. That's why I decided to do that one. Pick those strikes for the most part. And it lines up with all my rules that I go into on these earnings trades. I've done a webinar on that, and again, don't have a whole lot of time to talk about that. I'm really running late, so I got to pick up the pace here, or really running long, I should say. And then into TLT. This is a couple of trades that I covered. If you remember, it was last month, almost a month ago now. I went into TLT when we were starting the rally. I got tested a little bit. I mean, I never really got tested, but I was trying to pick a top right around in here, and it's pushed a little bit higher. So, but since then, when I started seeing it come off, I actually added a little bit to it. So originally I started out with the August 147 calls, sold those for $1.01, and I did it pretty small, luckily, and then it kind of rallied up against me. Once I started seeing it pull back off again, I added to that position. Couldn't get a whole lot for those 147 calls, but so I went down a couple of ticks and sold the 145 calls for 55 cents. Now this morning I covered those 147 calls that originally sold for $1.01. I covered them back for 14 cents. Went well over my 50% of max profit, but when I was getting close to that 50% of max profit, I was looking to sell it, but I was like, this is really still going down. I'm feeling pretty bearish, and added to that with those 145 calls that I originally sold for 55 cents. I covered those this morning also for 24 cents. So sorry for the real long and drawn out webinar, or almost a webinar. No, not quite, but at 15 minutes we are pushing the envelope on our daily market commentary. Anyway, so go to protraderstrategies.com if you are into trading these earnings trades, you should check out those webinars I did on the rules around earnings trades. I've had a lot of success with those in the last several quarters, and they work out really well. Also, check out that volatility crush class that I did, because that really explains volatility, everything about it, and it is one of the most important things to understand in the Greeks, as far as I'm concerned. All right, so that's all I got for you guys today. If you can't take that, take it easy.